Good evening and welcome to The Square. Tonight we are going to be discussing the recently passed a new income tax law, which was gazetted on the 13th of April this year. Some of the key issues we'll be discussing and debating here on The Square will focus on the impact of this new tax law on businesses across the country, specifically on small and medium enterprises, which constitute over 90% of businesses in Rwanda. All this and more on tonight's edition of The Square. And joining us tonight from The Square, from KPMG, is Mr. Angelo Musinguzi. Thank you very much. Senior Manager, Tax Services at KPMG. Thank you for honoring our invitation.
Thank you.
As always, I am joined by the four resident panelists who make up The Square. Myself, I am Dan and PC, part of The Square. I'm joined here by Ephraim Wamendie.
Yes.
Great to have you, Ephraim.
Likewise.
Berna Namata.
Thank you.
And Charles Haber.
Good evening, Diana. How are you?
Good. Last week we missed you, Charles.
I missed you too.
Yes, but you're here with us this evening.
Yes.
Yes. Are we going to have a quick recap of the week, or should we dive straight into things?
Recap.
Yes, we need a recap. So usually on The Square,
Bana is itching.
Talk about
a lot of good news. We usually have a recap of the week, what's happened thus far. I know it's the middle of the week, but a lot of eventful things have been happening this week. And usually I don't chip in, but let me just start by saying that I'm so proud of this country and what it has done. It's just achievement by achievement, and it's just 3 days into the week. You know what I'm talking about. I'll let you expound on it. But this is the tourism office that has actually gotten a very good deal with Arsenal. And maybe you can expound on this.
Is it a very good deal? How much did they pay? For the sponsorship.
That's what everyone is asking, but so far
I think approximately 10 million.
We can't call it a good deal until we see the numbers. But I think it's good in terms of brand, because I think
brand
Arsenal
visibility.
Yeah, because I think Arsenal is probably I think 6th or 4th in terms of largest sports brands in the world.
It has apparently 35 million views per day.
Yeah, actually on the continent, on the African continent, it's the second largest sports brand.
Yes.
So it's actually pretty remarkable.
It's pretty remarkable.
Yeah.
I mean, this is people saying, visit Rwanda.
Yeah.
35 million times.
I wonder if they know what Rwanda is, though.
They will learn.
They will definitely know.
Berna, what's your take on this week?
Two things. One, it's the news coming out of the World Health Assembly, which was happening in Geneva. One, the African health ministers endorsed the creation of the African Medicines Agency, which will harmonize how the different drug authorities across the continent work together. And I think that's a big win. Two, conversations around universal healthcare, very crucial, very key. And apart from that, as a good Catholic, I'm happy that we are seeing finally the priests resigning over molesting young boys. Yeah.
Good stuff. You have lots of good news this week compared to last week.
Yes. The last couple of weeks have been quite depressing.
Yes.
Yeah.
Charles?
President Kagame is in France.
Yes.
Yeah. And I think that's definitely very exciting in the wake of our summer salt games between Kigali and Paris. It's always nice that the politicians deem it important that irrespective of our differences, we have to visit one another. There are a number of French businesses in town. There are more that are knocking on the door. So it's good that the two leaders are talking.
And also, to add to that, our Foreign Minister, Mushikiwabo Louise, was endorsed to be the Secretary General of Francophonie.
Yeah, and I think it goes to speak to the issue of politics being... there are no permanent friends or permanent enemies. It is always about, interests, mutual interests. If you can get that done, I think,
Yeah.
Mr. Musinguzi, do you want to add to this recap of the week? Or
I was reading that some companies are not going to declare and pay dividends
because of the new
compliance.
Oh, okay.
With the regulators.
We'll dive into that.
It's a time for companies to comply and declare dividends.
Okay. Yeah. So we're just going to get straight into it. The first issue that I want to talk, and of course my panelists will also chip in with their follow-up questions, is the rationale for this tax law reforms. And just before I give my question, just to give a bit of background, on 13th April 2018, the Parliament of Rwanda enacted a law that established a new income tax law, and this law focuses on a couple of things. This personal income tax, corporate income tax, withholding tax, and capital gains tax. It has been said that this tax law aims to boost domestic revenues in this country, and by so doing, cut tax subsidies, widen the tax base, bring tax evaders to book, and also align tax laws to East African community policies. But Mr. Musinguzi, as an expert in this field, can you just shed a bit more light to us on the panel and our audience members on the rationale for this tax law reform?
Yeah, thank you very much, Diana. In terms of amending the tax law, the income tax law was last amended in 2005. And it has been quite a long period, and there have been a lot of changes in economic environment, in the business investment, in the business environment. From the side of regulator also, there have been challenges to enforce the law. Therefore, it called for amendment in order for the side of investment to help them do business, and for the time of the regulator is their business of tax collection. So generally speaking, the amendment is for both sides to benefit. And the rationale, of course, is to increase tax base. As you know, more than, as you said at the beginning, more than 90% of our economy is run by SMEs. And in most cases, these SMEs are not captured in the tax bracket. The new law now tries to seal the loopholes, bring them into the tax net, and where taxpayers have not been complying, enforce compliance, thus increasing the tax revenue and tax base at large.
So these are the key reasons.
They are the key reasons.
Okay, before I'm going to go to my next question, and then we can, as usual, follow up and ask Mr. Musinguzi more questions. This is to do with, sort of coordination, institutional coordination between RRA and maybe the Ministry of Finance and Economic Planning. Recently, the Minister of Finance and Economic Planning presented a budget framework paper which stated that the next fiscal budget, basically 2018-2019, will be domestically financed to the tune of 84%. Basically, we are going to pay 84% of our national budget in this coming fiscal year. Would you care to share more on this and also explain to us whether this new income tax law will feed into the national budget?
Definitely it will feed into the national budget, because by increasing the tax base, revenue collection from domestic tax collection from all the taxes, VAT, corporate income taxes, employment taxes are going to increase, and then they will feed into the fiscal revenue that will be generated. And as you know, again, there are also amendments or improvements in the non-fiscal revenue. When we talk about property tax, we talk about land tax, and so on. All these are now, they are being collected by Rwanda Revenue, so they are trying to centralize, they are trying to use EBM, they are trying to capture every person into the tax net. And thus, that one will increase the tax base and achieve the projected targets. However, 84% is not a simple. It's not very simple, because there is a shift from the 62% that was last year. That gap, to increase it in 1 year, then a lot has to be done. Yeah. Yes.
Do you want to add on to what Mr. Musinguzi has just shared with us? A framework, right?
A conversation on taxes is it's an easy and hard conversation. I think mainly because when you look at what taxes are used for, you do understand the need to, again, increase the tax base. And now what he is defining as increasing the tax base is basically not just finding more things to tax, but ensuring that as much aspects of our economic system are within the tax net, or at least are being captured in our tax within our tax system. But the hard aspect of this conversation is when you look at it from the side of business owners And when you look at it from, I would say, more a microeconomic perspective, you know, tax is a very, 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 very tough aspect of business if you are unaware of the aspects of tax. Let me just say, misinformation and miseducation. If you don't understand, again, we know that the kinds of fines people get if they do not use EBMs right. We know the kind of fines people get if they don't declare their VAT well.
I'm one of those people who's been fined.
You've been fined. We also know, and I think he mentioned it earlier about non-compliance. We know what RRA tax audits can lead to in terms of fines. And these are things that when you sit down and you sit with an SME, you realize that it borders on them working for, in terms of the sweat and labor, it borders on them working to produce taxes. And obviously that has a knock-on effect towards our consumption, or at least inflation, and how that affects our economy, and what we can afford, and how the standard of living. But just in a nutshell, for me, just to add to him as an introduction, I would say this conversation, or at least changing the tax code was necessary, but the question I would then ask him again is how much consultation went into engaging all stakeholders in relation to this, the change.
Yeah, basically, when the procedure is that the private sector is involved, their inputs are considered, and they make their submissions. And there are some other organs, like, for example, the Institute of Accountants, professional accountants. We have lawyers, they are all involved, and they make their inputs and discuss with RRA about their views. Some of the views are taken into account, some of the views are not. Yeah, for example, this one, I'm head of the tax working group at the Institute of Certified Public Accountants of Rwanda, and we discussed at length with RRA and Ministry of Finance about these new changes. We made our submissions. Most of them were considered because you have to also give a backup why you think otherwise. So we did that, and eventually...
I'm keen to know what was not considered.
Yeah, that's what I was saying.
And the procedure, again, it goes to Parliament. You know, it went to Parliament. Members of Parliament made their inputs, came back to Rwanda Revenue and other implementers. They reviewed again. So it is a procedure. It has taken actually more than 1 year in a discussion. This law has taken, the procedure started in 2006 to amend this law, but it has just come out in April this year. So it has been a process, actually a very long process. Yes.
It's a shame that RRA is not here to clarify, because essentially it's difficult to discuss the tax law without Rwanda Revenue on the platform. But you will help me to clarify some issues. You know, if we go back to the consultative process that you're talking about, you work for KPMG. It's an audit firm. It's international. How many SMEs can actually afford your services, you know, to help them? Someone like you, who's,
tax advice,
you know, tax advisory services. So in this consultative process, where are these small businesses that actually don't have the capacity to hire tax advisory services, you know, the likes of you?
We have what we call the Tax Issues Forum at the private sector, and they speak on behalf of the SMEs and everyone. So the views that we gave during the process were not the views of one individual or one company. They are views of SMEs, they are views of large taxpayers, and they are also views about the tax administration. So we cannot isolate one company, one SME, but we are saying, if we say, for example, SMEs pay taxes at 3% at lump sum, every SME is there, is part of that 3%. So they afford our services, of course. We help them.
They're not for free.
Sometimes we give back for free. We don't charge.
Pro bono.
Pro bono.
And you know that, for example, we have Top 100, where we meet SMEs and educate them on taxes. We carry out tax education campaign. we implement what revenue is saying, we meet our clients, we meet taxpayers, and we give our views which benefit society.
Let me wonder, if we take the recent reforms of the income tax law, could you explain what they mean to me as an ordinary random with no attachment to any big company? What does the new income law actually mean to me?
There are different aspects that have been touched on the new income tax law, but to you as an ordinary person, you should know that it's your obligation to pay taxes. So whenever you earn income of whatever size, know that you have to pay taxes on that. If you don't know the technicalities, that's where we come in and tell you how to compute, how much to pay. We used to say that if you don't know how to account and pay your taxes, most of the taxpayers are not even, they have not reached a certain level of education. Just get your invoices, put them somewhere there, and you call me, I come and compute for you taxes. But for you, what should come into your mind is that there's a tax law, and I have made a profit, or I am doing business activities. Should I register as a taxpayer? If you don't register, then you'll be registered forcefully and you pay penalties. So the ordinary person like you, but you are not ordinary, in this case, the ordinary person who is doing business, whether in the city of Kigali or in the country, even outside, we have people who come from outside and do business in Rwanda and go back with money. They should know that there's income tax law and they should pay taxes.
But in terms of the specifications, because we have a new law, if you could tell me that, you know, the 18% that you've been paying is changing to this, that would be very helpful.
Okay. More than 20% of the income tax law has been amended. So, amended. So, if you want me to tell you the changes, I don't know.
At least the key changes.
The key changes. One, you have been hearing about capital gains tax.
Yes.
Whereby if you sell your share and you have a gain, you pay 5% on the gain.
But now that is shares. But the ordinary citizen, I think most of them fall into the category of consumption tax. That's consumption tax bracket and personal income tax bracket. Has anything changed under consumption tax?
Consumption tax, now we are talking about VAT.
Yes.
We are discussing income tax law.
Okay.
There is consumption tax law and we have VAT, which is part of the consumption.
So that has not been affected?
It has not been affected. There are also changes in those laws which are being made, like we said, EBM and so on.
Yeah.
They are not part of income tax. Income tax is on profit that you make.
So my question is, isn't there a knock-on effect? Because, and again, this is always a discussion we have. I think we've had it previously on the Square. Isn't there a knock-on effect that leads, or at least, because we're now talking about the investors, or at least the income earners,
yes,
bearing that tax burden, right? But isn't there a knock-on effect being caused by on consumers, being caused by this? The fact that an investor knows, okay, my return on capital is going to be significantly lower than I anticipated because there's been a change, so let me increase X, how much I sell my products, or let me increase Y. Isn't there a knock-on effect currently happening?
Let me even add to his example. For instance, the consultants, it has been, they're no longer under the 3% regime.
The liberal professionals.
Yes,
liberal professionals.
It's now
Yes.
30%.
Yes.
Which is major.
I want
so for me as a consultant, for instance, if I go and say, you know, these are my consultancy services, I usually charge maybe 300,000 for this and this, maybe, you know, whatever service it is, I will have to actually increase my price because of the taxes that have increased. So isn't there, what he's saying, a domino effect to the consumer at the end of the day?
You see, everything has a background. Liberal professionals, although we as an institute, we disagreed with RRA on definition because it is not clear.
It's vague. It's
In the
quite
law,
vague.
they say liberal professional. I don't think that terminology itself is English.
Which is part of the problem.
Because when you say liberal professional, you don't have, like, for example, a commissioner general rule or an interpretation. How you say the people in these brackets are maybe tax consultants, are auditors, are engineers, are lawyers. But the history behind it is that these are advisors who are educated. Okay? Because you can't call yourself a professional when you are not educated. And you are advising other people So the idea behind this, and when we were discussing it with, when it was still draft, we were saying, look, you are not supposed to hide under someone who is selling fruits and bananas, and you also pay 3. And the good thing was, for us, we understand where revenue is coming and where your question, where it is coming. Liberal professionals don't have expenses. The expenses are very few.
So they have,
if I come here and present and you pay me, which expense have I incurred?
Exactly.
Maybe
so basically, if you give me 1 million,
transport costs,
how much is
5,000?
5,000?
And actually, most of the time, that the costs related to you doing the assignment are paid for by the client.
Exactly.
Yeah.
So now, tax administration is saying, you people, this is the source of revenue. Because you prepare your accounts, you have your income, down you have your expenses, which are very few, and the rest is profit, you pay 30. But you have been hiding and paying 3. So your question is true. Also, maybe some of them will also, because of the cost of preparing accounts, may also increase their fee notes. So that's what you are saying. Yes. But the idea behind is for them not to hide, and people who are selling tomatoes, and yet they are professionals. So that's the history about it.
And this is actually one of the key rationales to streamline these tax regimes if compared to the repealed law.
Exactly.
Last
However,
year.
our view was that whether you are a liberal professional or you are a normal taxpayer who is selling goods, and you have a turnover, as is described in the law, of say less than 4 million, you are a micro enterprise.
Yes.
And again, this economy wants these kind of people to come and advise. You asked me a question that the people are expensive. It's because they are few. So we want to encourage them become many in the community, in the society, in the business environment. They advise people how to pay taxes, how to do accounting. We have a problem of accounting in this country.
Yeah, serious one.
People don't know how to prepare books of accounts. They don't know how to keep records, and don't know how to compute taxes, VAT, monthly returns preparations. And RA is requiring a lot of things in these returns. And yet you are saying everyone should prepare accounts. So there should be a certain level. There are people allowed by RA to become tax advisors. Okay? Those people, some of them are small individuals. Okay? But when you oblige them to prepare books of accounts, and when you say books of accounts, I don't know whether they understand what I mean. They mean a balance sheet, a profit and loss account, statement of changes in equity. They mean things to do with, for example, notes, prepare depreciation schedules, which in most cases is also another additional expense.
And high voltage for some of the
So
businesses.
from the tax perspective, it's going to increase their taxes, but again, it will affect service delivery. But I agree, if a certain threshold, if, for example, you are a liberal profession and you raise a fee note of 5 million, why don't you prepare your accounts? But there are those who earn on a monthly basis 300, 200, 500. Those can also be categorized as such, without saying from the trade perspective that an SME means someone selling goods, not selling services. That's my own view.
I think another one, sorry, Bana, that I saw in the income tax, the new income tax law, is taxing board fees, sitting allowances. Yes, and that's at 30%.
Yes.
And I looked at it because some of these institutions, when you look at the board, the sitting allowances, they're as meager as 50,000 francs per session. And you're going to tax that further by 30%. And to me, I thought that was a little bit harsh. Yeah.
Brenda, before I go to the next question.
Yeah, and he raised the issue of not agreeing on the term of the definition. Yes, which I think in the end usually affects compliance, because depending on how you interpret it, that is how you comply, and then in the end you have issues around tax disputes. So my question to you would be, from consulting with RA, why can't we have clarity within the law?
I think normally what happens when the article is not clear, the commission has a mandate to explain by putting it in a commissioner general rule, how it should be interpreted. So I think that will happen. If you read the income tax law, it's referring or postponing some of the things that it will be as described in the order of the minister
Yes.
in the order of the minister, which most of these orders have not yet been published. So let's wait for them to be published, and if these things are not clear, then we RA will explain and make a ruling. That's what we call the public ruling on definition of things and how they should be interpreted.
So, Mr. Musinguzi, my next question, and we just touched on it a bit, but I want to take a deep dive into it, is on the tax rates. And I'm looking here specifically to small and medium enterprises as well as consultants. On a social media feed, a lot of people are actually watching it because they fall under this category for obvious reasons. And, according to the Ministry of Trade and Industry, 98%, I'm not sure if that figure is dated to today, but over 90%, let's be safe to say, of businesses are considered SMEs, contributing to 41% of all private sector jobs in the country. So my question, just overall, how business-friendly, in your expert opinion, how business-friendly is this new tax law to small and medium enterprises?
Again, you look at the size of the economy. When you talk about in the definition, by the way, there is no generally accepted definition of SME in this country. You go to RRA, they have their own definition. You go to Ministry of Commerce, they have their own definition. You go to RDB, they have their own definition. But today we are discussing for tax purposes.
20%.
20 million, sorry. 20 million per annum as turnover. When you don't exceed that, then you are an SME.
Yes.
And 20 million is not big.
So are you telling me that 98%, okay, maybe the statistic is not from Rwanda revenue, but are you telling me that majority of the businesses in Rwanda do not go above 20 million in annual revenue?
That's what they're saying. 98% are SMEs, meaning that they earn below 20 million.
Because this is a figure, as you're telling me, that was used in 2015, but it's still being used across the board.
Correct.
Yes.
However, 20 million threshold is really small. The only challenge, when for us international taxation, when our large taxpayer in Rwanda may be called an SME in USA. The largest taxpayer here is an SME in the UK. Our threshold for turnover, when you say VAT, is 20 million. You have to register for VAT. You find someone with a billion and above is the one who is registering for VAT. So you have also to go with the standards of the economy. But let's go with our standards now. We are saying 20 million. People who don't earn more than 20 million in this country are more than 90% and contributing the majority of jobs. Now, these are the ones who are facilitated to pay 3%, to pay lump sum tax. Okay?
And turnover at the end of the year.
At the end of the year. But there are many. They have an impact in the economy. And they should be facilitated again to graduate to large taxpayers. But the challenge which I understand because I've been operating in this economy is people hide their income and call them SMEs when in actual sense they have more than 20 million. This is why we are saying the tax base is going to enlarge because they are captured from different angles. VAT EBM captures you. Because now you cannot invoice without EBM. Sell your property, capital gains. And the buyer has to disclose this. That I've bought an asset of this. You can't make a transfer before you declare. So it's going to be minimized. And that's why this beginning we said the tax base
is going to be widened.
May be widened. So they look at different perspectives when they are looking at these things and then put it in the law. So it is true the SME is still big, but they contribute little in terms of tax. By the way, I don't have statistics, but more than 70% of the tax collected are paid by not more than, say, 400 taxpayers.
Yes.
Because you understand, and now we have another definition of large taxpayers. The Rwanda Revenue Income Tax Law defines a large taxpayer as someone who earns 400 million turnover per annum. Okay, that is categorized as a large taxpayer. 400 million is not a big thing. But in our economy, it's a big thing. And again, remember, the administration, tax administration, categorizes these people because of different reasons. They used to be mixed up, Someone declaring taxes of a motorcycle is lining up with someone declaring taxes of a telecom. So they say, let's also do our tax planning, do our tax categorization. We also train our staff who will go and audit these people according to their nature of business and how complex they are. So that's why they have this 400 million. They understand you are a large taxpayer. You should be able to pay an accountant. You should be able to keep your records for 10 years. You know that the records are kept for 10 years?
No, the statute of limitations is
That's
10
another
years.
thing the taxpayers are saying. How can I keep records for 10 years waiting for you to come and audit?
Exactly.
But for you, a large taxpayer, keep your records for 10 years after withholding tax, for example.
That used to be 3 years.
It should actually, in most economies, it's 5 years.
5 years,
Yeah.
but now it's 10. I will come down to audit your business
10
after
years.
10 years and keep and wait for me.
So I'm still, so the statute of limitations on fines is if they come and do an audit and they find a mistake from, what year are we in, 2018? They find a mistake from 2009. I pay the fine for that.
You pay the fine and you pay interest, which accumulates per month.
You know, one of the most bizarre things about the 10-year statute of limitation is that the EBM receipt itself has a lifespan of not more than 2 months. It fades over time.
Exactly.
So you are expected to keep records of a fine print that cannot even stand the test of time.
But there is an
Yes.
update on this as well.
Yes.
We have been complaining.
Can you be very quick before we go to the
as
break?
tax advisors,
Yes.
they have enhanced the EBM version, whereby they are bringing the EBM generate invoice electronically using your computer.
Yeah, version.
Actually, we're
And
going to
the
come to
printer.
that. We're going to discuss this
So
after the
the
break.
fading thing and so on is going to be
That's very important. We're going to discuss it after the break. Please stay tuned. We're here discussing the new income tax law and the impact of this law on businesses across the country. Stay tuned. We'll be back after the break. Welcome back to The Square. We are discussing the new income tax law and the impact of this law that was gazetted on 13th April of this year, the impact of this law on businesses across the country. My next question is still a bit on, we talked about SMEs, but consultants, in terms of this new tax law being tax-friendly to consultants. Consultants before would pay 3% under this tax regime because they were, bundled together with SMEs. And these liberal professionals as consultants will more or less be called, are now under the tax regime of paying 30%. But my question to you, 30% on the income tax, my question to you, Mr. Musinguzi, is to do with, and this is something that we got in some of the people who are talking to us on social media about this topic. Is this fair, especially as these are the professional services we want to see thriving as we head in our quest to be a knowledge-based economy?
Yeah, it's fair. However, it should have been implemented gradually.
Yes.
So that they let people know, small ones, however professional you are, sometimes you have small income that cannot guarantee you to prepare books of accounts and keep them for 10 years. Sometimes you don't even have space.
Hey, 10 years as well.
Now, it should have been implemented to me gradually, but it's fair because you cannot advise others when you cannot advise yourself. That's very key. So if this income tax law, of course, the declaration have to be made by 31st of March 2019. This means that they also have to submit their tax returns prepared according to, local GAAP. They are not obliged to prepare using international financial reporting standards like large taxpayers, but at least they have a local GAAP, where you have at least an income statement, you have a balance sheet, you download them and attach them to the tax, together with the tax return, and you forward it already. It's costly, but it should have been implemented gradually.
Gradually.
Yes.
Speaking of gradually now, to do with the electronic billing machines, as we all know here and as people also watching the show know, is that these machines are going to be phased out. And just briefly to give a recap of some key statistics, they're valued at 5 billion Rwandan francs and are set to be phased out by mid this year to pave way for distribution of a new internet-based software. Currently, there are apparently about 19,400 EBMs in circulation, which usually costs a total of 200 to 300,000. I'm sure you all have worked with some. I bought mine for around 250,000. So one will need a printer and internet for this phase 2. That's replacing the electronic billing machines. How practical is this move for the majority of businesses across the country, and will there be a trial phase? When you spoke about gradual in rolling out this new phase?
Yes, the tax administration, in this case RA, has been inviting taxpayers to come and insert the software into their machines, free of charge, and it has been tested and has been working. The current EBM machine has caused a lot of problems in terms of tax refunds. As you said, invoices fade, and you take it to claim your input, they say we can't read. Okay? You make a photocopy, they say we don't allow photocopies. And again, because of the congestion of the system at RRA, you declare your output tax, RRA does not see it. The other guy claims input tax, they say we can't pay the tax that has not been, refund the tax that has not been paid.
Exactly.
And now it continues to be a problem. You rotate, you move. Sometimes they tell you to take your machine at RRA to check offsite in the IT department, which has been also causing a problem with taxpayers. It's an expense. Carrying EBM machines in taxis, going to RRA, bringing them back to your premises, it has also been a problem. But the new one, wherever you are, whether you are in the US, you are in Rwanda, as long as you have internet and a printer, if you want to generate invoice.
Keyword being as long as you have internet.
Internet.
But
it's limited.
And even in the neighboring countries, when you go, for example, to Kenya, they also do the same. They have what we call the ETR machines. You generate invoice, the whole paper, the way you want, but down there is a number linked to RRA system, which acts as EBM. They see the number and then the rest you do. But
my question to you, Mr. Musinguzi, and I'm sure most of the panelists will ask as well, is the practicality of this new phase. We just said that the majority of businesses are actually small and medium enterprises that don't really necessarily have access to internet, let alone printers. So is there a trial period for rolling this out, or by June this year, that's it?
Now, you have also to look at the number of registered taxpayers in this country for VAT purposes. The VAT law is that, says that if you have a turnover of less than 20 million, it's not an obligatory to register for VAT. So basically, the other 2% we talked about who are enlarged taxpayers are the ones concerned with VAT. There are also people who are doing an exemption services, which exempt who do not necessarily need to register. But, you know, RRA has got branches, has got districts in Kigali, in Chimihurura. So people they have been given time, free of charge, to come. But once they announce that that free time is over, then everyone has to register using the new EBM machine. So it's gradually phased out, and they have anticipated the problems, they have tested it, they have done the research of recently presented the survey about how EBM has helped, you know, people access their refunds and so on. So that it's not something that's coming boom and falling on people. They are aware, they are sensitizing people. Even us who are in practitioners, we are sensitizing our clients, we are talking to everyone. I understand even those people outside, they are hearing us now, that they can go and register with their EBM and change into the new version. Even the former version was using the internet. So,
well, it was using
SIM cards and
SIM cards,
USSD. No, I can attest to this. You know, we were one of the first companies, or at least a couple of our companies were one of the first companies to start using version 2. And I learned a very huge lesson from using it, that tax compliance is directly correlated with internal compliance. You know, because they first of all, when we import our products, because they are linked to our TIN number, they go straight into the system. Then after, if we then, any invoice that is produced with our TIN number, it's reflected in the system. Then we can either choose to accept it or reject it. And if we accept it, we can link it to inventory directly. So you find that a lot of what version 2 addressed was that manual input that was required from getting a physical EBM, attaching it to maybe your company standard invoice for accounting purposes, and then entering that data. And then, like Charlie said, after 2 months, it has faded. And then also another challenge that was happening, you see now this whole idea of accepting and rejecting EBMs, the receipts that are raised against your TIN number. Before, you would find that, and this was a huge challenge, you'd find a lot of your input VAT when you'd go to with the receipts to claim it. They'll tell you
being rejected.
Yeah, to be a lot of you find.
I know there are some companies claiming, input VAT. Why VAT was designed in such a way that you have output, you first claim your input is to facilitate your cash flow.
Exactly.
Now I have input, I have 1 billion to pay. I have input of 600 million, and I am only allowed to claim 100 million, then which means I have to go to the bank
to get
and look for a loan to come and pay VAT, where I'm going to pay interest.
And then, and I think you mentioned it earlier, that the speed at which RRA resolve issues. So you find that you have to get the money to pay so that you are compliant. But then they'll tell you, now let's look into the case. And you find the situation.
And that will take, it could take even.
And as a
year
matter
or
of
so,
fact, I think last month,
even 2
RRA
years,
did come out very openly and say they did not have enough money to refund taxpayers their VAT.
They are true because they are saying we can't see money paid where we can get your refund.
Yes.
And this is the government money. But they are saying if the system is very clear, I have paid taxes, I have produced invoice, and it's a genuine invoice, immediately the law says you should get your refund if you're an investor in 15 days.
Yeah.
And investors from everywhere read this law and come and say, I will not have a problem with cash flow because in 15 days I will get back my input VAT at customs. Remember, even at customs you pay when you import goods. And you say you judge and say in 30 days I have my money back, but it's not there because of the system error, because of the administrative errors, and sometimes even you, a taxpayer, you have made your errors. But the system is very key, so it is very transparent, it's very clear, and then they wire your money to your bank account. You don't need to go to the bank and get a loan and pay tax and so on. So that's why we are saying this system, we are looking forward to it to solve many problems.
So in the long run, it's just basically going to make the lives of taxpayers significantly easier in the long run.
Yes,
hopefully.
Hopefully.
Obviously, we can speak with certainty.
Yeah, and more so because from experience, it takes a long time to resolve a tax dispute. While RRA is very keen on the audits, if there are any disputes arising out of the audits, they usually take their time actually to listen to you, to give you audience. And as a business, in most of the time, one, the fines keep accumulating, the penalties, you're forced to provision for this. And then by the time the issue gets resolved, either you have closed or you're about to close.
Yeah, actually, I think if you one of the challenges that I would say, and I think it's good that we're moving from 62 to 84%. That's a huge jump. Rwanda Revenue is one of the few revenue authorities in the world that effectively funds its government's activities. Most revenue authorities in most African countries are more there just to give back money to business people. But at what cost? Because when you've heard me talk about this before, he talked of the output and input tax. So theoretically, if I'm selling 1 billion francs worth of products and I'm buying 600 million worth of those products, meaning I'm supposed to pay my VAT on that net amount of 400. And so 18% on that 400. So theoretically, that 400 is technically my gross margin, if I'm not wrong. The accountant will correct me here. Now, that 400 million, I've paid my 18%. Then I'm going to get taxed 30% on that amount, that 400 million, after I've deducted all my
VAT
expenses.
is output minus input.
Exactly.
So you have sold VAT,
1 billion.
Goods, and the VAT on that goods is 1
billion. And I've bought the raw materials of...
You have paid is 600. So the 400 is the entire VAT you take to RRA.
The entire VAT?
Yes, because we're talking about net tax. Net output, net input.
So in that case, then my question then comes is, you have this 18% that is levied on the difference between sales and input, right?
Yes.
Then you also have, after that balance remains, you have the 30% that is levied on your gross profit as well. After your net profit, sorry.
Treat VAT does not make part of the profit tax. It's another tax.
No, that's what I'm saying. So you have two aspects of tax. You have the input, you have the VAT tax.
Let's talk about one law. When we mix two laws, you may get buried somewhere. Let's talk about VAT.
Okay.
The principle for VAT is that when you sell goods, you are a taxable person, you charge VAT, 18%. But remember, when you are buying what you call input, you are also being charged VAT. So get VAT, you have charged. Subtract VAT, you have been charged. And the difference is what you take to array.
So my question then is...
Then when you bring in the income tax, again you come back. You say, I have sold these goods, net of VAT, and therefore I have also incurred these expenses. So the difference is where you apply your 30%.
Exactly.
Yes.
So my question then comes in is, isn't that when you combine both of those taxes levied on a business, because we're basing this, we're levying these taxes on consumption and performance. When you levy these taxes, aren't they a bit high?
Yeah, you are talking about two taxes. Yeah. There are also other taxes you are not talking about. We are saying we have 18% VAT, 15% withholding tax, which is a problematic tax, by the way. And we also have VAT in the form of reverse charge on imported service. If you are an importer, you have also paid 25% on customs. You have paid 1.5% IDL
infrastructure. Yes.
You have paid this
AU tax, RSB tax.
RSB is not a tax; it's a contribution.
It's a contribution. It's not a tax. Even it's a tax.
But people call
but
it
it's
a tax
cost
anyway,
to the business.
It's a cost.
It's a deduction. It's a statutory deduction. So people call it a tax. And now for manufacturers, they also have excise duties, which are actually paid every 10 days for them. So you find that the taxes are there, but each tax is paid from the income you generate. So if you want to analyze the tax, go one by one and see who pays what. But you are talking much about personal income tax. That's the concern of the common lady.
So just but you see what Angelo is basically saying is that, yes, cumulatively, it is a lot of taxes that are being paid. But in order not to feel it, break it down.
Yes.
Break it down.
But at the end of the day, we still pay a lot.
And it will not be as painful as it otherwise is.
Which brings me to my next question. We have 10 minutes to go. Time goes so fast on issues that are very interesting like this. But my last question, and this is based on all these taxes you've just been breaking down, which it sounds alarming, to the layperson. Yes. So, and this is more or less to kind of play a devil's advocate, and I'd like your take on this in the next 10 minutes before we end the show. These reforms are obviously aimed at boosting domestic revenues in this country, as we also strive to reach phase 1 of the national strategy and transformation. But what do you say to comments that 18% of VAT, inclusive of other taxes, is just too much for a country that is, our economy is still based in agriculture? And some of the questions I want to ask, is it better to have, for instance, 1,000 people paying 10% tax as opposed to 10 people paying 18%?
Yes.
Basically, the idea should be to increase the tax base. And by so doing, kind of not have a lot of... have a heavy tax regime on Rwandan citizens. What do you have to say to that? Yeah,
thank you. I would first of all talk about the percentage itself. You said 18% is high. Normally, we also, the tax administration, it's not in isolation. They do what you call the comparisons. For example, in the region, look at macroeconomic activities, look at the environment. They say, look at Uganda is 18. Kenya is 16. Tanzania is 18. Burundi is 18. So that range is almost the same. Okay, so if we say taxes in East Africa, if it is high, then because Rwanda cannot bring here, they want revenue. Government wants revenue. And remember, VAT is a tax that is paid by the final consumer. It's not a tax on your profit. Your role is to collect it. And you can even avoid it, by the way. You can avoid VAT, you just don't consume. and then you keep your money. Then you don't pay VAT.
But
what you are saying, the question you are saying.
But also that question, if you can have a sort of
I'm coming back to your question.
Comparative analysis with countries in the West.
In the West countries, actually, their tax rates are very much higher than the African rates.
Is it?
Yeah.
What
if you
about
want,
Southern Africa?
I can share you with the statistics because I have access to all of these statistics globally. VAT, corporate income tax, excise duty rates are very high. Actually, they are punitive. You go to Russia and ask them what is your corporate income tax rate. Go to US.
But there's a catch-22 with that, because that tax code is significantly more complex to allow for tax avoidance.
Yeah, you said the minutes are running. I want to answer your question.
Yes,
what you said, isn't it proper for 1,000 people to pay at 10% than 10 people paying at 18? I told you 80% of revenue is collected from a few taxpayers. So which means if you lower them, still you will get really true. 80, that's my assumption, that 80% more than 70, less than 300 people contribute to that.
My assumption.
Look at, for example, our economy. How many telecoms do we have? How many banks do we have? How many insurance companies? Okay? How many audit firms, which are big? These are the companies that contribute to the VAT 80%, and they're not more than 100.
But my assumption.
So if you want to reduce it to 10%, so that you bring many people in brackets, one, administratively, it will very be difficult to correct.
Yes.
Because the law is actually saying you audit people, refund them in 1 month. You are going to refund about 10,000, 100,000 people. How will you manage that? Then two, you concentrate on a few people, then you keep on cascading down, increasing down. In fact, when I saw this law where they are saying a large taxpayer, a small taxpayer is from 12 million up to 20. That's the definition in the law. You are considered a small taxpayer. Most likely you will find next time RRA brings the threshold from 20 to 12. So everyone above 12 million register for VAT. Because they are building their capacity, now they know how many they can handle. You know, handling people in VAT or taxpayers is like handling guests in your house. Okay? Yeah. Because should you bring more guests and you don't have capacity to serve them, what happens? So you go slowly as you expand your capacity, you also expand the threshold. Yes. That's my own thinking, if I can equate it like that.
Okay. Yes. It's definitely eye-opening. Closing remarks, very quickly from the Brenna and Ephraim. Closing remarks?
I think I would say, more than anything, Rwanda Revenue has done an amazing job because, again, like I said, compared to other tax authorities in the region, across the continent, across even the world, we have such a robust way of collecting tax. But I genuinely believe that there is a nuanced way. Like, I feel we have rushed when you try to rush a harvest, I feel like we have rushed certain things, and he mentioned some of the areas where we could have moved a bit slower. And for me, it always comes down to, again, this classification of SMEs. We've talked of above 20 million, and then you talk of large taxpayers at 400 million. What about those in between? And even to get to that point, because, at the end of the day, for businesses, we use profit to grow, and we use cash flow to grow. And Rwanda Revenue has also, to be efficient in taxes, has reduced the timelines. So before you would know, you would sit on your VAT for a whole quarter, the money you have to remit. So you have that cash flow for 3 months. Now we have to do it every month. And these are just some of the things that you find come at an expense, even though they help the economy grow.
Brenna, very quickly.
Absolutely, I can agree more with Ephraim. I think RRA has to be more efficient, fix the loopholes, and I think that will help in terms of increasing compliance. Right now, the issue of resolving tax disputes, in my view, is still lacking. It takes very long to resolve a tax dispute, and this is a big expense to a business.
To businesses. Well, we've come to the end of the show. Tonight we were here discussing the new income tax law and the impact on businesses across the country. Please continue the conversation using the hashtag #TheSquareRW on our social media feed. And we will also share this particular episode, in case you missed it, on our YouTube channels. Thank you for joining us. Mr. Musinguzi, thank you for honoring our invitation to be here. And really, this was very edifying, I think, not only for us on the panel, but also for people watching at home behind their screens. Thank you very much. To The Square, always a pleasure having you guys on board. Thank you for staying with us this evening, and see you all again next week.